Good morning, everybody. What's up? I'm on a writing deadline for TheStreet.com, but I wanted to put this out there, a quick video, just to update you on my thoughts here and what's going on. This morning, if you saw producer prices coming out this morning for January, huge increase, up 0.6 on the headline number, producer price index up 0.6. That is the fastest rise in 5 years, the year-over-year percentage increase now in commodity inflation, the fastest in 5 years, all right? The core, the so-called core rate, which strips out food and energy, that was up 0.4. All right, that was double the estimates. The headline rate was triple what we had in December. Again, I've been saying this all along. Rate hikes equals price setting higher, okay? You don't have to believe it if you don't want to. You could believe that rate hikes quash inflation. You know, I had a guy on here a couple of months ago. He was writing all over Facebook how I was wrong and rate hikes don't lead to inflation. You could absolutely correlate the pickup in inflation going back to December 2015 when we had the first rate hike. You know what the irony, there's an irony here, and that is the Fed's just sitting there. And their sitting is actually helping to suppress inflation because they are holding off on these price hikes. But in their mind, and they're going to move ahead on further price hikes, believe me. And see, I just call them price hikes. I don't call them rate hikes. And that's what you should start doing. You should start calling interest rate adjustments price increases or price cuts, okay? Price increases when we're talking about rate hikes, price cuts when we're talking about rate cuts, okay? You shouldn't even say rate hikes or rate cuts anymore. Just call them, price adjustments in the direction that they are. So the irony is that the Fed's just sitting here. I looked at the FedWatch tool at the CME, and that only shows a 13% probability of a price increase. See, I'm calling it a price increase in March, at the March meeting. But in the Fed's mind, it believes that those price increases are quashing inflation. It's really funny, actually, and the fact that they're sitting on their hands, but they're going to move. We're kind of in a stagflation environment. People don't really see it yet. The economy's not growing that fast. Now, let me make a quick comment about the stock market, which has been in an uninterrupted rise, which is not healthy. The healthiest market advances are when you have good back and forth action. This keeps people on the sidelines. It keeps people skeptical. It continues to provide the necessary buying power. When you shoot all your buying power at once, in other words, when you have these kind of relentless price increases in stocks, it doesn't end well, okay? It doesn't end well, and this is not going to end well. And by the way, let's tie in this inflation thing now, this whole inflation theme, which I called going all the way back to November, December 2015. By the way, let me just throw in here, gold is on a sustained rise, everybody. It does react to inflation. And actually, the gold rally is the kind of rally I would like to see for stocks. Kind of unconvincing, kind of hesitating, people selling it all the way up. That's the kind of rally that lasts, all right? This thing in the stock market, when it just shoots up like this, like I said, it's going to end badly. One last thing on stocks, and I've said this, well, actually, two more points I want to make. One about stocks. Inflation reduces the future value of earnings, okay? Just like inflation reduces the future value of your money. In other words, the market's rise now is getting more and more and more stretched from a valuation standpoint because inflation reduces the future value of those earnings, okay? The stock market has not discounted that yet. It does not reflect that. Everybody's all, ooh, Trump tax plan, which is going to be pretty much a zero as far as I can see. And finally, they're buying the dollar a little bit. It's not a crazy dollar rally today, but they're buying the dollar. That's wrong too. That is wrong too. Inflation reduces the purchasing power of your money. So there is absolutely no way that it will equate to a higher foreign exchange value. The people who are buying it now are zombies. They are misinformed, okay? So they're going to lose money, and I will be a taker of their money. That's it for now. I'll be back later. See you guys. Have a great day. Rest of it. I'll see you later. Whatever.